Hey, it's Mack with PriceActionTradingSystem.com, and it is Tuesday. It's May 2nd. This will be our chart lesson for the day, and another very low volatility, low volume kind of day. I mean, generally from the open until maybe noontime is when you get most of your movement. And again, that's where we're still getting most of our movement today, um, open till about noon. But notice here from maybe 9 o'clock to almost 11 o'clock, I mean, there's nothing there. I mean, there's really nothing there. So the volatility is low. There's just not a lot of entries, not a lot of trades. And what will happen is people will get bored with this. And so I'm going to get on my soapbox for just a moment today before we get started on the chart list, because this chart list is going to be real quick anyway. There's just not much to talk about, but people will get bored with ES and say, why would you want to trade this when you can go over to oil, let's say, or um, some of the currencies or whatever. Uh, but even with this low volatility, this market is so predictable. Once you understand it, and once you got our rules down, and once you've traded it for a while, it's very predictable, even when it's very low volatility. And the good thing about it is on a trade like this, if you do get fooled, you don't lose a lot of money. Now, if you get it wrong in oil or you get it wrong in some other fast moving, sexy kind of market, you can lose. I mean, even though you can make a lot more money on a move, you can lose a lot more money. We don't need a big move, those large moves to make a lot of money. You don't need that. So I say stick to the ES no matter how boring it seems, because just when you think this market is dead, it'll come roaring back and it'll have the easiest day in the world. So it's just part of it. Um, you don't have problems with slippage in this market. The other markets you will. If you try scalping in oil or some of those currencies, even though they are sexy and they move fast, you're going to get a trade right, and you're still going to lose money because you're going to get slippage. And your entry is going to jump out there, and you're going to enter, and you're going to get 2 or 3 ticks slippage, and then you're going to exit instantly. It'll never affect you on the exit. It's only on your entry, and you'll go in and you'll go out with 1 tick. And or I've actually had it where I entered. By the time I actually had a situation, I think I was trading the yen, and my entry was above my exit, so I entered instantly and then instantly exited for a 1 tick loss or a 2 tick loss or something like that. So instead of having a nice 4 tick winner, I had a loser. So I learned the hard way. So trust me when I tell you this. Don't learn the hard way. Um, Stay out of those markets. They're usually too thin to do what we're doing here. If you want to swing trade them and you want to use our strategies to find the entries and then stick with them, then you're probably okay there. But if you're going to try to scalp them, it's just a matter of time till you get burned. And some of you can probably share your horror stories trying to scalp those thin markets. They just don't have the volume that we have in the ES. I mean, it's rare if ever you get slippage in the ES. It just doesn't happen. And you can trade boatloads of contracts and not have slippage. If you're trading, let me back up here. If you're trading during regular hours, if you trade over here in this overnight, you could tell this was probably going to be a slow day, because look, that's the entire overnight. We didn't move 4 points hardly. So that's a good sign. When we shot on through and traded lower here, if we didn't find support pretty quickly, I would have been thinking, hey, this may be a trend day. But notice how we found support real quickly, and we couldn't go any lower. So then when we start higher, then you're looking at a range day. Most likely this is a range day. So yeah, don't let this discourage you. Don't listen to the people that say, hey, you need to go trade oil. If you like that market, I'm not against oil, but be careful trying to scalp 4 ticks out of oil, because or any of those currencies or some of those other faster moving markets, because they will indeed, um, they'll get you. And definitely don't try to trade some of the other commodities, especially stuff like the meats and uh, you know, the softs and all those things. Don't try to trade cocoa or coffee or whatever. I mean, you can trade those if you're trying to swing trade them, but don't try scalping those markets. In fact, I say stay away from them unless you know those markets really well. You're much rather you're much better off becoming an expert in the ES than you are an expert in hogs, unless of course you're a hog trader and you raise hogs and you know a lot about hogs, because there's just so many things that can change and in those markets. And the ES is pretty steady. It's the same. It's very easy to learn this market if you watch it every day. And so anyway, I spent 5 minutes on that, but I felt like it was worth saying. I hadn't talked about that in a long time, so I felt like it was worth saying. And but yeah, when you start seeing the ES the EMA flat like this and prices steadily going back and forth, just stay out. Um, you finally get a nice entry right here that you really should have a secondary tight line right across there. And you can see that little failed break lower that gives a double test to this, and then if you catch this and you're reading this right, which if you saw what I just described, that you're going sideways and you get that little failed break lower and you get this double, notice this low, and you tested it once, twice, it's a little double test of that support area. Uh, there's a good chance that this is going to catch you an important low of the day, and guess what? It does, and you can ride this all the way back to the top. And this is a good example of why you exit a little bit before the very highs, because notice that even though we got above it right here, the overnight high was really the high of the day, and then the low of the day turns out to be, it gets tested multiple times and it holds. So we did lose every time we went back up. We seemed to have lost steam. We lost steam here. Notice we bounced again right here, but we did lose excuse me, we did lose steam on the way up here and here. Of course, by this time there's probably nobody left because everybody's given up on the day. It's obvious that there's not a lot of buying or selling. We're just kind of at an equilibrium point. So, but just when you think it's not going to get, this market's dead, it'll come roaring back. So the longer we go with it being like this, probably the better the move will be when it does move. So just be aware of that. But let's talk about the trades. It's not going to take long. This was obviously a failed break higher. It wasn't, well, I take that back. It wasn't obvious until we came back and tested the overnight high again. And this is a perfect reversal pattern. It would have liked it a little better if this pushed on through and then came back. But then you wouldn't have had as much room before this low. So having all that room before this low makes me real confident that I can ride this down to at least there. But this thing just keeps going. And you can see that shorter term trend line. Until we get a break of that, I'm going to probably keep riding that thing. So anyway, notice the new high, there's a first entry, and then you push down, second entry, and it just comes back and tests that high. So that's a failed break higher and a nice bearish bar. Just go short, one tick below that. That's a great move. And if you had, depending on how you traded this, if you're trading multiple contracts, you saved a few runners, you might have been done on that one trade. It might have been all you needed for the day. But notice we made a little double bottom here. Okay, I'm sorry. I'm having a little problem with my throat this afternoon. Got a little, but I also had a phone call there, so I got a little bit distracted. But yeah, we were talking about the bounce down here. I believe this is where we were. Notice that you made somewhat of a double bottom here, and so this is just like a failed break lower. You could almost, I actually like this trade. There's not a lot of room back to the trend line though, so for that reason, I'm not going to mark it. If we were all the way down here on the other side, I'd probably mark this trade. But in this case, I think you probably need to wait on a higher low, and that comes here. And then once again, you could still make the argument that, we don't have a break of this trend line yet, but we do have the shorter term one, and we've got a new low and then a higher low. So this is why I'm always saying you're better off to wait on that higher low. So you got to figure here prices are at least coming back to the EMA. That still doesn't leave you a lot of room, but when you've tested this level 1, 2, 3, now basically 4 times, we're probably going to get a little bounce here. And so but the reason I didn't make it blue is simply because we do not have a break of that trend line. So technically by the rules, you probably should at least wait on a double test rule or something like that. And we don't get that till over here. So that's the reason this one's green. But I still like this one. Um, Once we got up here and we started going sideways, if you weren't out yet, you might exit just to be safe. But you would have gotten out of this one for sure if you hung on. But once you start seeing these dojis in here and going sideways and no real bodies, just stems, I'd probably exit if I didn't get my 4 ticks yet. So we do get a reversal here, but obviously, hopefully you can see why you don't go long there, because by the time it broke higher, you got 3 or 4 bars stacked up there, and 2 of them are actually real dojis. So um, then you actually test this. You actually get a double test here. Let me talk about this short. Notice you got this high, you got another high, and look how flat we're starting to get. This is like a little failed break higher, and this was the first break here, so we may get a retest. So I kind of like that one to go short. By the time we got over here and it broke lower again, with all that sideways, I'm staying out of that, especially that close to that double bottom there. Um, and again, notice you got a trend line, a small channel working up and a break in a new high. And so that's another reason I like that one. Um, you really need to wait on the lower high in this situation here, though, because we did just bounce off this low, and this could be a range day. It has all the ear makings of a range day, other than we had a pretty good sell-off right after the open. So uh, you you got to be careful getting short here, even though we don't have a new low on this larger channel. But you don't really have a whole lot of price action that tells you this channel is valid either. Even though that's a third touch, you've only got 1 touch on this side, and it's so nothing coming all the way down through here. So this is a little suspect. So you got to treat this like, hey, this might be a range day. So, and it's dangerous going short on a range day when you just came off the low that close to the low. So that's why that's green. I hope that's a good explanation. Sometimes I don't explain these as deeply as probably I could, but the idea is not to teach our strategy here. The idea here is to show you the trades that set up for our strategy, and then you can learn the strategy on your own and compare your trades. So that's why I don't do, people want me to go into a whole lot of detail. And if I did that every day, we'd be here for an hour or two every day. And I just don't have time for that. So that's really why we don't do a whole lot of teaching here. But anyway, you get your double, you get another, notice how we're going sideways. You got your clear low, you got your clear high, you had a failure out the top, which will generally lead to a failure out the other side. And notice we traded down into this. So a lot of times you'd be thinking, hey, the odds are if we succeed going out, we're probably going to go the same way. So that's a reason to try to catch that as well, because it might turn out to be an important high, and you might get a measured leg down just like this one. But that didn't happen. Notice we had the failed break lower, then that gave us a double test here. So I like when it broke above right here, that's also a second entry long. I like going long. It's not a great signal bar, but you don't need it in this case because of the other reasons here. And at this point, I figure we're probably going to here to this high right here. Definitely probably this one, the overnight high, but maybe even this one. But we couldn't get back through here. So notice you got your trend up. I missed this one right here. This is your reversal pattern. This one, only reason I marked this one is you got 2 measured legs up. It's basically a failed second entry short. It went short here, but it never broke higher until here. So this would be the first place you could go long. And it did confirm the trend line, and we weren't back to the highs. And you got plenty of room there. So that's why I like that one. Normally I'd want that to be closer to the EMA. But you got to figure if it breaks higher here, we're probably going to test these highs. And that's where it goes. And then notice what happens again. Notice you got that high right there. And now you get a double test and a lower high, basically a double top, but it's even a lower high. and a nice bearish bar. I like going short right there. And now you're looking to try to ride it back to the other side. And off it goes. And then you get your true reversal pattern right here. This is a great setup. Notice the new high, pull back first entry, you shoot through the MA, pull back second entry. If you drew that trend line right there and drag it up, it fits perfect. Closings, everything. Nice bearish bar. Just go short, and that's an easy ride. I wouldn't exit that till when it started bouncing here at these lows. I'd either exit a tick or so in front of that, or when it bounced here, I would exit on the first bounce, which would have been probably right here. This was really the first touch, so maybe right there. You still would have got out the same place either way. So, yeah, not a lot of trades today. So I did think I did feel like I'd go into a little more detail, and I did want to talk about not giving up on this market, and because I know what happens, it gets boring, and you feel like it's not a lot of movement. It doesn't feel sexy, but when you're in this business, you're not in it for the thrill of trading and the sexiness of that. If you're still thinking like that, you're probably got a long way to go before you're going to be successful. When you start looking at this like a business, and you start thinking like a business and thinking successfully as a trader, you're going to realize that, hey, I'm better off to find me one market, become an expert in it, and I'll take what it gives me every day. And that's what we do with the ES. We don't have to worry about slippage during regular hours. We don't have to worry about the market. Very rarely does it just take off and go straight up or straight down. It gives you a little room for error. It's a very efficient market. If you'll notice, it always comes back and tests areas. It doesn't give you many freebies, so you have to understand it well and you have to be prepared. But it's very predictable. So I'm going to leave it at that. I'm going to wrap it up for the day. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.